All right, ladies and gentlemen, I hope you had a wonderful weekend. We got an exciting week in the market with Jerome Powell and the summary of economic projections. But as the last couple weeks have shown us, the market isn't caring about your typical data events, and we are worried about whether or not this is just a correction. Is it going to lead to panic? Do we have any more highs for the end of the year? And a lot of other questions. So on Friday, we had a nice bounce. It was 2.5% on the NASDAQ. It was looking good, but just don't forget, last Friday, we had almost the exact same thing. We started off a little lower, we bounced up, and then by Monday, we had another pain session. So we're going to go over a couple of things here, but what I do want to start off with is the correction, because that is what happened the last week. We even closed on the S&P down 10% from the highs, and people are talking about whether or not this is just a blip. We're going to hear some comments, or we're going to go over comments that Scott Bessent said about a correction over the weekend, but when it's all said and done, 10% from the highs is a correction, 20% is a bear market, and I might as well start with this key here because since 1998, there has been 11 corrections, and the average price decline between them is 14.3%, right in between correction and bear market. Now, if you calculated that from the highs of when this all started, that would mean 14.3 would be 52.68 on the SPX. Maybe you should write that down. Now, why is this becoming important? Because over the weekend, Michael Hartnett, Bank of America, they were talking about all these corrections and pretty much saying, do we freak out right now in the market? Is this a temporary correction? Is this something bigger? And the way they're looking at it is, for now, it is something temporary. And what they are saying as the signal, you pretty much wait till cash levels go back above 4 and high yield credit spreads go back above 400. Once you see that happen, then they're going to advise all of their clients to buy the dip. So that's pretty much what's happened between 1998 and up until now. You've had these little mini corrections, some bigger than others, but once the cash levels drop, right when they get back above 4 and the high yield spreads start to widen again, that is when the market starts to bounce. So keep this in mind, because through this week, the data, Jerome Powell, you are going to hear a lot about this. Correction, no correction, out of correction zone, we're bouncing. Is it going to be bigger? Is it smaller? Even though it's only March, we still got to deal with all of this. That uncertainty is at high. So we're going to go over that. I have all those keys, everything else, what I need from you, a thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/thestackmarket. We will see you there in the morning. And before I play the intro, I'm going to just start with the pretty picture. So here are some other things. Remember, last week we came in to the theme of uncertainty, and people are talking about a lot of the uncertainty and peaks coming into this week. And if you look at the bro bubble, Bitcoin, Meta, all of the tech stuff that you thought would have ran up, and it did go up pretty much 50% after the election, it is now down 25% since inauguration. This is getting some people to say that Donald Trump cares more about the voter base than the money that would benefit off of this. Again, the crypto and all of that. So point is, we've watched a lot of things pull back. Again, global uncertainty and policy uncertainty per the small business survey. That is hitting a high here. And then if you start going through the assets, cryptocurrency, this is a multi-year peak. It looks like you go to tech stocks, you're starting to see the same cyclical peak. Go to the dollar as well as treasuries, and we are seeing this all across the curve. And then there's that one chart I showed you. And then finally, coming into a lot of the other events and where we are now, gold, this is also a big deal. And the relationship between gold and even bond yields, we may see something big this year. And don't forget what we talked about last week, and we were saying this dynamic of stocks down, yields down. You got to be prepared for it. That's why even the skew and the options, we've been changing our strategies here a little bit. But the last time this happened, it was 2000, 2002, 2008, and there's only another set of handful of names or times in history where you have had both yields down and stocks down. So by the end of this year, I do think if bonds stay down, we should do a little bit better. But again, this little shakeup in uncertainty, it has been pretty large to start. So those are all of your pretty pictures. I hope you liked the video by now, but now run it.
out, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
Right off the bat, like we talked about, this correction and whether or not we're going to keep seeing relief besides the data, just the momentum and levels, it's probably going to get people's attention. Oh, wait, did I hit the horn instead of that? My bad. I meant to show you the keys, but I'll jump over here to the chart, and the thing I want you guys to see is not only we had the same bounce dynamic on Friday, but why did we go up this Friday? There wasn't really anything. I wouldn't say it was any events. You got a couple of piece headlines here and there, but when it's all said and done, we were ignoring a lot of things and going down regardless if there was good data, and you started bouncing with no real driver. It did seem people were just looking for relief on Friday, so we'll see what we get into over the weekend or even coming into tomorrow. There will be a little bit of data, and now as far as the weekend, we got a couple of comments, and now this is one thing I'll even tell you. We've been going over this dynamic. Remember, it's like Trump versus the market and Powell. You're going to have Powell this week. We've been going over a lot of these theories, but this is a phrase we've brought up in the past. Michael Hartnett, Bank of America, he also said this as well as a reminder. Markets stop panicking when policymakers panic. So think about it. The last couple of weeks, markets have really had a panic. What has been your response from Donald Trump? He said, we need a detox. That's fine. I don't know the future. Anything could happen. He didn't really step in. Even the Fed, Jerome Powell, none of them are really saying much. We're going to see here. He probably shouldn't say much. And then now over this weekend, we had Scott Bessent. He said a correction is healthy and he is not worried. So if you think about it, last weekend, we had our little relief rally. Trump made these comments. It got people even more worried. We were kind of in the same dynamic we're in right now. That led to the gap down, and then you started getting the flurry of tariff news. And then this weekend, we're getting the Bessent comments. I don't think it'll cause us to go down too much, but once again, you're not getting people panicking, trying to step in. If anything, Treasury, Powell, even, again, the president, they're all kind of stepping back. So we will see what the market does. And once again, that is going to be a major theme we got to watch for this week. But that is key number 2. Besides that, did I put CPI? I meant SEP. I see I caught it right away, but SEP, Summary of Economic Projections, you will be getting Jerome Powell on Wednesday. I think right before, even the same day of Powell, you get the Bank of Japan, and then there's like the ECB and Switzerland, and I believe the Danish by the end of the week, but there's a bunch of countries that will be moving, so that could impact gold, and I'd keep your eye out for that. But when it's all said and done, we are going to be looking this week to see if Jerome Powell is going to change the Summary of Economic Projections, i.e. after this little freak out. Think about it. The market has kind of panicked a little bit. A lot has changed in terms of expectations. Is this going to change how many rate cuts the Fed is expecting by the end of the year, considering the market just went from 4 to 1, now back up to 4 cuts by the end of the year? So don't forget about that dynamic. That's where the SEP is going to come into play. We'll even see what they say about the economy, but again, I'm expecting Powell to kind of go hands off. I don't think he could be blamed for anything. They might keep things broadly similar so they could stay in that position. But if there is any volatility with the SEP, this will be able to move us a lot. And if the SEP and Fed does not move us this week, it's going to go right back to momentum land and whether or not we have a further correction or we get some of that relief. So we'll see how that plays out tomorrow, Monday. You will be getting the retail sales data. So that'll give us a hint in terms of how the market wants to react to economic data. Remember last week, even consumer sentiment kind of caused the reaction and it wasn't the best. And then you saw how the market kind of did the opposite. That's why I'm saying the whole week, we really just ignored the data. We took it in, we got hyped up, but all of the moves throughout the day weren't really caused by it. And then people were brushing off big events and hyper fixating on smaller events. So with the Fed, all these other central banks, and even the start of earnings, we will see where this all leads us to. But those are the main keys. It should be an exciting week, and I hope you're ready. But now, let us get into the plays. So, right off the bat, baby, gold And I have a little bit of an update for you. So here is according to Bank of America, and a lot of people have been talking about gold recently at hitting $3,000 an ounce. That's a big deal. It has never done that in history. And now why? What's the reasoning? We've heard people say they're stacking up all this gold. They've said it's for tariffs. They said it's for this. The Canadians have no gold. There's been so many reasons. And even the last couple of years, gold has really gone crazy. But right here, right now, they are saying it is truly the best hedge. They are saying if the American exceptionalist trade fails, kind of like what you're seeing, the dollar's going down, big tech is going down, China, Europe, and all these other places start to rally instead. If the money goes to bonds and out of stocks, if you watch that exceptionalist trade fail and then even the embarrassment trades start to come back up again, if that exceptionalist trade dies, that would mean you long gold. That would kill the dollar. That would be the rise of gold. That is reason number one. The other one, that chart that I showed you in the beginning, they're saying that if the Fed either has to cut rates due to the economy slowing down, or if there is a crazy rate move because inflation gets reignited, gold is going to win in any instance, up or down with the rate cut move. So that's why they're saying gold is a winner. And then finally, if we get into a fully extended, full-blown, biggest trade war we've ever seen, 54% of survey respondents on a Bank of America fund manager survey says gold would be the best trade in that outcome. So ta-da, use that information. Let's see how it plays around 33,000. It's either going to go to 3,300 or now give back another $300 to $500, and then we'll bounce around. But for the most part, there's a lot of things pointing towards gold. Probably going to have another good year. The only problem is just don't position too high. But shout out physical gold, baby. But that's play number one. We'll see how that plays out with all of the central bank moves this week. I think that'll get a lot of activity. And then play number two, China, KWEB. So I think there is expected rate cuts tomorrow. People were talking, and there was a lot of rumors about suspected changes and what they're going to do with real estate and all that. So you should wake up and hear about some sort of China stimulus, or maybe towards the end of the day on Monday. But that's going to be on watch. They still have been holding, and they have been one of the leader trades. And believe it or not, China tech is still underperforming some areas even after this rally. So we'll see how that plays out. There's also going to be some AI announcement from a couple of China companies. I believe Baidu is releasing ERNIE 4.5, and then I think there is going to be another one. So watch out for that. That'll be play number two. And then finally, I know it's good. This is going to blow your mind. Earnings, man. FedEx and Nike. So I got old plays on Nike from a while ago. I even made some last week that I got crushed on. But other than that, I think I might make some plays on here if all makes sense. If we get either a rally or a big move and the premiums end up being cheaper ahead of earnings, I think this could be a good opportunity. Otherwise, just get ready, though, because we were talking about it right when earnings season starts. This commentary from companies and their guidance, that's going to add another wave of uncertainty or optimism as we are trying to figure out whether or not we are correcting, crashing, rising, relieving, or anything else in between. But other than that, I don't have any other plays. We'll see where tomorrow takes us. I think we are just going to vibe with it. And before you know it, you're going to find out more uncertainty, or we overreacted and then we play the next game of news headlines for the next quarter. But Chad, that is your watch list, ladies and gentlemen. Make sure eyes are healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, abs and legs. Oh, yeah. I don't know if they feel me, bro. Abs and legs. Don't neglect them. Oh, yeah, I'll leave it there. You don't know if I talk in the gym, philo. I could be talking a lot of things. Oh, man. Well, have a good one. Sleep well. I'm still clapped, bro. You know that? I'm clapped like the market, but I'm chilling. But I got a long-term. You get that long-term, and please get a long-term. Save 10%. Hey, you're wasting your time with that one. Horn.